morning, everybody. Today let's take a look at a basket that we just made yesterday, the healthcare basket. And once again, I'm going to sort according to the RW coefficient. Let's give it just a second for the standard deviations to get loaded. It takes a moment to calculate those. Okay, so let's take a look at the very first one. The first one on the list is outside the second standard deviation, THC UHS. It's got a pretty good correlation, and the RW coefficient is really strong, which means these guys are probably highly related to one another. So let's go ahead and move this into the analysis side. Okay. So we can see that for a pretty good period of time it was completely flat, and then a couple of months ago it decided to take off. Okay, if it's going up, and the way we've got the pair set up is THC, so THC has been outperforming UHS during that period of time. We can see it clearly from the chart here. You can see it clearly from the chart over here on this side as well. Just for interest's sake, let's run back over here and look at the principal component analysis for this product. And once again, you can see here this is a picture that shows how the product has performed compared to the model that we create from principal component and from the principal components. And the center line right here would be right on performance according to the model, and this is performance over almost 3 standard deviations above the model, and this one is over a standard deviation below. So you can see that everything is giving the same picture here. One other quick thing is THC and UHS are the first two on this list. You can see how very similar they are. We can discuss principal components at another time, but you can see that they are very, very similar signatures, if you will, for how they move against the principal components. Okay, so let's go over here, and this thing is saying 25 days as a quick and dirty return to the mean. I'm not sure about that one, but we're gonna take a look at this in a second. The only negative I see here is the drift is fairly high. It's over a penny per day, almost a penny and a half per day up. So we'll have to compensate for that on our targets. So let's make the pair. And I think we're going to spend a little bit of time on the hitting probabilities today. I think with a pair that's been moving this so strongly one direction for such a time, I think you're going to find that the model is going to be interesting. Okay, so here the mean is 0.566, but we were talking about this thing changing by about 3 pennies per day, and it's at least a month out, maybe more. So we have to move this up, say $1, at least $1. So we'll move this to, let's say, $1.60 or so, just for fun. Again, let's go back here. Yeah, the earnings dates are right here. We have about 7 weeks, more or less. Maybe a little more than 7 weeks before the earnings dates pop up, before that becomes an issue. So let's jump over to the hitting probability, see what we have over here on this side. We'll get this one. Okay, so 45 days I think is fine. We said we were going to look here at $1.60, I think. Let's just run this first. At $1.60, notice this is interesting, right? 45 days is about, let's say, what we have. I could increase that just a little bit, but at 45 days, you can see that we're down here. Now we're at 7.5. 7.5 is about here. So in 45 days, we certainly have, I think, the model is telling us anyway that we've got a strong possibility of making a profit. But getting down to $1.50, I don't think so, or at least not a strong percentage. $1.50, this thing is saying, or $1.60, this is saying 88 days is the mode, not 45 days. So let's be less aggressive here. Let's put this, say, to $3 and run it. Okay, so this now, say $3 is perhaps better. It says the mode is 17 days, but 17 days is the most common number. But notice that by far the largest number of the simulations finished outside of that. Okay. So 50% of the time it's saying in 54 days. I still would like to get that number down to something less. I'm going to go ahead and try this one more time at $5. Okay. Now I think we're seeing something more okay. 50% of the time we'll be there in 24 days or less, according to the model. The mode is actually 9 days. That would be great if we hit it in 9 days. So, and there's still a good profit number there, right? That's still $2.50 in a fairly reasonable period of time. So this is an interesting case here. We're not going to shoot for the mean. The product itself has been moving up so strongly that the model is telling us that hitting the mean is going to take quite a bit more time than what we have before our expiration dates. Before our earnings dates rather. So let's just retarget it to a $5. All we're going to do is try to get it back to here. So as soon as this thing turns around, as soon as we see a beginning of a downward trend, we're going to put this trade on. We're going to try to make a couple dollars, maybe $2.50 on this trade. We're not going to put a target of coming back to the mean. Okay, so THC, UHS, we're shorting the pair. So that means we're selling THC, and we're going to buy however many shares of THC we bought. We're going to buy 0.52 of those shares of UHS. Very good. I like the pair. Have a good day trading.